Welcome to Crypto Alpha Edge, your daily crypto market recap, macroeconomic signals. Bitcoin closed the day at $105,652, moving between $103,827 and $105,885. Despite persistent macroeconomic uncertainty, the market managed to post a modest 1% gain. Analysts pointed to the $106,000 resistance level as a potential pivot. A breakout could initiate a new uptrend, while a breakdown below $101,000 might suggest deeper consolidation ahead. This price stability is particularly notable given rising Treasury yields and mixed economic data out of the U.S., including weaker than expected PMI figures. The fact that Bitcoin held firm through these signals is a sign of decoupling, or at least relative strength. Altcoins Movement, Ethereum saw a modest pullback of 1.39%, ending the day at $2,540. Technical indicators suggest the asset remains in a consolidation zone between $2,480 and $2,600. RSI is neutral, while volume shows declining interest, possibly a pause before the next leg. Solana remained flat near $157, with key support sitting at $151.76 and resistance overhead at $165. Some traders noted a bullish divergence on the 4-hour chart, but the move remains unconfirmed. Meanwhile, XRP continues to lag, now sitting nearly 34% below its January highs. The asset remains under pressure as regulatory clarity remains elusive, especially around its classification in the U.S. market. On-chain metrics. Network activity continues to rise. Bitcoin recorded over 1.2 million active addresses within the past 24 hours, an 8% week-over-week increase. This level of activity aligns with previous accumulation zones seen before breakouts. Total transaction volume for Bitcoin hit $12.5 billion yesterday. Whale wallets, holding 1,000 plus BTC, saw net inflows, suggesting that large holders are quietly accumulating. Meanwhile, funding rates on perpetual futures remain neutral across major exchanges, showing that traders are balanced between bullish and bearish expectations. Open interest has remained steady, a sign that the market is not over-leveraged at this stage. Institutional adoption. Perhaps the biggest institutional story of the day came from the UK, where IG Group became the first publicly listed company to offer direct crypto trading to retail investors. This move adds legitimacy and potentially unlocks access to crypto for thousands of new users in regulated environments. US-based spot Bitcoin ETFs also reported another $320 million in inflows for the week. That's a 15% increase compared to the previous week, marking 3 consecutive weeks of positive net flows. BlackRock and Fidelity continue to lead in volume, with new entrants starting to compete on fee structures. Technology and product launches. Elon Musk's launch of XChat, a secure communication tool inside the X platform, received major attention across the crypto sphere. The tool offers end-to-end encryption modeled after blockchain messaging systems, disappearing messages, and cross-platform voice or video. This is more than a novelty. XChat could represent a shift in how crypto-native privacy tech gets integrated into mainstream social apps. Several analysts noted that Musk's push aligns closely with Bitcoin values: decentralization, censorship resistance, and sovereignty. Elsewhere, developers continued to prepare for Ethereum's Spectra upgrade. While no vulnerabilities were identified this week, researchers from Wintermute and Chain Security warned about risks tied to poorly optimized smart contracts interacting with new base layer changes. Regulatory developments. In a surprise shift, the U.S. SEC formally ended its long-standing civil litigation against Binance, citing progress in cooperation and operational transparency. Legal analysts were quick to point out that this doesn't necessarily signal an end to scrutiny, but may indicate a shift toward more collaborative enforcement. In Europe, regulators approved the first crypto-focused venture fund backed by a government program. The fund, based in Germany, will provide early-stage support to projects working on zero-knowledge proof scalability and decentralized ID. Meanwhile, South Korea moved to allow certain nonprofits to hold and trade digital assets. This marks the first such reversal since the 2018 blanket ban and could be a test case for broader regulatory easing in the region. Market outlook. Arthur Hayes, former CEO of BitMEX, doubled down on his prediction that Bitcoin could hit $200,000 to $50,000 by the end of 2025. He cited a combination of expanding M2 money supply, de-dollarization in BRICS countries, and declining trust in central banks as catalysts. Other analysts remain more cautious. Glassnode reports indicate a clustering of short-term holder cost basis between $104,000 and $107,000, suggesting strong buying interest in this band. The next few days could determine whether this zone holds or fails. To sum it up, the crypto market held steady through mixed macro headlines, rising treasury yields, and major regulatory shifts. Bitcoin remains resilient. Altcoins are mixed but mostly stable. On-chain metrics show healthy network activity and accumulation. Institutional adoption continues to accelerate, and Musk's XChat integration could be a sign of what's to come in crypto-native social layers. This was your Crypto Alpha Edge recap for June 1st, 2025. Stay sharp, and we'll see you in the next update.